Hi, everyone. Welcome to State of the Market. I'm Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. We got a ton of people that watched last week's video on dividend-paying penny stocks and subscribing to our channel. Several hundred of you subscribed last week, so thanks for that. And if you missed last week's video, be sure to check it out and be sure to subscribe so you never miss another money-making video. It is free to subscribe. Just click the subscribe button.
Now, do it now. Do it now.
Now, as promised, today I'm giving you my top stocks to avoid in 2022. Next week, we'll be talking about the best stocks to buy for the new year. And best of all, you get them before all those other best stocks to buy lists come out. Okay, so my first stock to avoid is also what I believe to be the best short in the market. MicroStrategy, ticker symbol MSTR. Now, this is a weird company. It has a software business, and it's doing fine. Nothing special, but it's not a disaster either. But the company's main focus is buying Bitcoin. That's right. That's what the company does. It buys Bitcoin, and it holds it.
Yikes. Well, good luck with all that.
Now, if you're thinking, well, that doesn't sound like much of a business model, you're right. It's not. The stock now trades somewhat as a surrogate for Bitcoin, though it's even more volatile. Last week, while Bitcoin was down roughly 5%, MicroStrategy shares fell 10%. Now, if you want to own Bitcoin, buy Bitcoin. I have no problems with that. But don't own this stock that doesn't have a business model and is not even a good surrogate for Bitcoin. Avoid MicroStrategy. My second stock to avoid is often on my list, and that's Inovio Pharmaceuticals, ticker symbol INO, though it should be NOTHANKYOU.
Oh, I get it. I get jokes.
If Inovio sounds familiar, it's because at the beginning of the pandemic, they claimed to have created a COVID-19 vaccine in 3 hours. Have you received your Inovio vaccine? I didn't think so. That's because whatever the disease of the day is, Inovio claims it has the solution. COVID? Check. Ebola? Check. Zika? Check. West Nile virus? Check. Any medical condition that captures the public's imagination is followed quickly by a press release from Inovio that it's on the case. Now, the company has been around since the 1980s. Guess how many approved products it has on the market? Is it greater than 20, between 10 and 20, or less than 10? Go ahead and guess. All right, okay, since you know it's one of my top stocks to avoid, you probably guessed less than 10, and you'd be correct, because 0 is less than 10. That's right, nearly 4 decades of futility. After 38 years, it has failed to produce one drug or vaccine that has been approved. So next year, when another bug is in the news, watch for Inovio to say it's working on a cure or vaccine, and then watch the stock crater in the months that follow when they fail to deliver yet again. Avoid Inovio like the plague, which it probably claims it has a cure for too. All right, I am taking a big risk here with my third stock, but I recommend avoiding Tesla. Now, I am not an Elon Musk hater, not at all. I own a Tesla. I love my car. I have never been a car guy, but I love this car. Now, it looks great. It performs great. I love not having to stop for gas. I used to hate long car trips. Now I don't mind at all. But the stock and the car are very different. The stock is priced for perfection. An awful lot has to continue to go right for this stock to increase its value. It's trading at 121 times next year's earnings expectations. Even if Wall Street grossly underestimates Tesla's earnings power, it is still exorbitantly expensive. Owning a stock with such a high valuation means you're basically expecting not much to go wrong, and considering the supply chain issues in every industry, that's a big risk to take. Inflation will also make the cars more expensive, which could hurt demand. If they don't raise prices, then margins will suffer. And additionally, there is increasing talk of dissatisfaction with the supercharger network. As more Teslas are on the road, there's more demand for charging stations and people are having to wait. Now, if you're on a long car trip and you know it's going to take 20 minutes to charge, the last thing you want to have to do is wait 15 minutes for a charger. There's even been talk of Tesla opening up its charging stations to other electric vehicles, which would make it even worse for Tesla owners. Now, if that becomes a problem for the Tesla owners to quickly charge up when they're on the road, that will not be good for the company or the stock. So at this valuation, there's just too much that has to go perfectly right. And if we get any kind of correction in the next year, high flyers like Tesla will be hit hard. So to wrap up, avoid MicroStrategy because it has no business model and is a poor substitute for Bitcoin. Avoid Inovio Pharmaceuticals, whose business model is to issue exciting press releases and never come through with an actual medicine or vaccine. And avoid Tesla. Great car, but priced for perfection. Too much can go wrong here. Next week, I will tell you my 3 to buy for 2022. Have a great Thanksgiving, everyone. And for more wealth and income building ideas, check out my free e-letter, Wealthy Retirement. Just click on the link below. I'm Mark Lichtenfeld. I'll see you next week with my top 3 to buy in 2022.